All right, good morning, traders, and welcome to the opening bell. Today is Wednesday, August 19th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. All right, things are moving. At 8:30, roughly an hour ago, we got the release of announcement that the U.S. Treasury is doubling the long-term bond buybacks in what they deem as a support operation. Now, the initial reaction did see US dollar move lower, yields move lower, gold move higher. Obviously, equity markets pair some of the earlier losses that we've seen. But we'll take a look at all the US dollar crosses. We're attempting to break some major levels here. So stick around. Questions or comments, feel free to throw them on the message board. All right, great to see everyone in the room. Hey, Latanya, good Wednesday morning to you as well. Daniel, Ashish, Angie, Yana, Mesfin, Robert, great to see everyone this morning. Here's what the US dollar looks like. So right now, as it stands, just off of the weekly highs, we've seen a decline of 0.7%. This does constitute a break of the initial weekly opening range. The major two levels we've been talking about, 99.41 into 99.49. The 38.2 of the yearly advance and the January high. That was also the objective monthly opening range low. This break does constitute that. It was this level and the 200-day moving average into 99.18. Now, don't forget on the weekly chart for the euro, we'll come back to yields in a moment, or the weekly chart rather for the DXY, the 52-week moving average is right here at 99.02. So this is the spot that we were talking about yesterday. Like, we've got to make headway below this zone for us to suggest that a much more significant high is in place for the US dollar and a potential break of the multi-month uptrend. So it's make or break right here. As it stands today, if we close south of 99.17, that would keep this in favor of the bears. And the next level down is 98.69. Yearly open support comes in at 98.24. Okay. As the momentum stands as right now, we're not into oversold territory yet, but a close below 99 specifically, again, the weekly chart, we're at 99.02 at the 52-week moving average. Close below 99 and a push below 30 in momentum would keep this on course for a test of uptrend support extending off that January low. So there's some serious implications for this break. Watch today's close. Okay, initial resistance, look for 99.17 initial resistance, followed by 99.40, again, 99.49. Wouldn't want to see anything above this if we're heading lower on this stretch. This zone should hold resistance now. Initial resistance at that 200-day. Here's that slope. Okay, keep that in focus. That's right around 99, where the 52-week moving average is. So everything lines up real nice and clean. Watch for a close below 99 today. And for the momentum signature, close below 30 would certainly be even more encouraging of a larger swing lower here. So the implications of what this means. So Treasury is doubling the long-term bond buybacks. What does that mean? So they've doubled it from $2 billion to $4 billion per operation. It's the echoes of what functionally this doesn't mean much, right? This is not technically QE, right? And it's not it is a form of yield curve control. So YCC is back in the house. But the concern is that this is saying that there might be some panic in the overall demand for government yields. We talked about yesterday in this room at length about how the rising yield phenomena is seen across the globe, right? France, Germany, England, UK, all of them, yields have been spiking higher. And whether it's the yield vigilantes or whether it's the debt clock, which just went over $40 trillion, whatever, pick your poison, whatever the reasoning behind it is. It looks like this is kind of Besant reasserting, he's not going to go down. He's not going to go down without a swing. So listen, this is going to be the camel that broke the camel's back, or the straw that broke the camel's back. At the end of the day, our discipline was to look for a break of this monthly opening range. 99.41, 99.49 was our line in the sand for the longest time. If we assert a close below the 200-day, below the 52-week, we'll need a weekly close below this to really validate it. That would be a break, a technical break of the uptrend, and certainly would suggest that there's a larger reversal underway here. Okay. Questions on DXY or anything with regards to this announcement today? All right. FOMC minutes are on tap later this afternoon. Not sure we'll get much out of that, but devil's always in the details. We also get the next Treasury auction at 1 p.m. Look to see how that's received on the back of this news. That might be a market mover as well. Here's what the euro looks like, though. Obviously, the breakout here is testing that 618 retracement at 1649. We're trading just above it right now. Look at the weekly chart first. The 52-week moving average is there. The 618 retracement of the decline off the highs from April is there. Okay, we've already challenged the break of that 618 parallel. So this is pretty big for the euro as well. Here's what it looks like on the euro dollar daily chart. Right into that 618, 1649 is the focus for today's close. We're besting the 200-day moving average on this stretch. Into today, we've been looking at resistance at 1609. That's the 1618 extension off the low. That's the downtrend resistance and uptrend resistance. Remember what I always tell you, typically a breach of uptrend resistance can oftentimes be the sharpest part of the rally. This is your first hurdle. There's three levels that we were kind of concerned about with euro dollar. The first was 1609, the 200-day moving average. Again, the 52-week moving average is there as well. And then that 618. This is the last of the lot. A topside breach, a close above 1649 would open up the potential of a test of the yearly open. That's 1745 on the upside. Initial support now, look right back at the 116 handle, 1609. Look right back here. Converges on slope basically into tomorrow, Thursday. Don't want to really see anything below that if we're heading higher on this stretch. The end of the day, below 1576 would be just nullifying this as a false break scenario. So all the same levels, nothing changes. This is the final resistance hurdle of the three we noted last week and Monday. And we need to see a resolved close northbound of this zone today to keep the immediate upside in play. I do want to also just remind you that momentum is right into the overbought territory. We're crossing 70 right now. So this puts this in a perfect spot for a resolved daily close northbound of 1649 with momentum northbound of 70 would be pretty, what's the word I want to say? There'd be fuel there for the potential run towards the yearly open. That's the next major target. All things held constant right into the opening US trade. You're testing Fibonacci resistance at 1649. Look for a reaction here. Questions, comments, concerns on euro? Right into resistance. Here's British pound. We got UK CPI. Came in a little hotter than expected on the year on year. 2.5 was the expected print, but we just held at 2.6%. You didn't see much of a reaction in sterling until we got that Treasury announcement earlier today. Here's what it looks like on the 4-hour chart. A break above 35.91. That was the level that was kind of the thorn in the sign for me. That's the 618 retracement from the decline off the yearly high. That's the May and August highs, right? Really clean from last year as well. We just broke right through it. Even this 3-point slope resistance, we just broke right through it. So momentum's trying to challenge the overbought condition here. Again, that's fuel in the fire if we get it. Next lateral zone, look for the swing high. I didn't have it labeled here, but look for the swing high from back here in May. Comes in at 36.58, and 36.85 is the high week close for the year. So 2 levels to keep in mind. Just right on initial approach here on this breakout. 36.58, and then 36.85 is the high week close. Look for a larger reaction there. Here's what the British pound looks like on the weekly chart, by the way. 36.85, there's the 2026 high week close. And then there's the 2025 high week close at 36.48. You got the highs in there from May and April. So it's prudent to keep that 36.58 here on the near-term approach, just in focus. Keep an eye on that. Is this the move we finally need to get some clarity on the British pound? I just published a piece on this exact weekly chart on FOREX.com yesterday, highlighting 35.92. So we would still necessitate a weekly close northbound of 35.92 to 91 to validate that, keep this upside in play. But the next kind of zone of resistance is 36.50 into 36 85. No doubts about it. It's your first lateral zone of resistance. 2022 high, the 2025 high day close, 3750s, 3745, just higher. Converges on the upslope into the open of next week. But this is an headline-driven event move. So we want to be cautious here and see if there's any follow through. The close will be critical. Here's Aussie dollar. Right back to the highs, right back to 71.20. It's the same resistance zone. Look, it looks pretty treacherous, an overnight trade. Yesterday, we marked support at 70.83. That's the objective weekly open. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. It's the 1618 extension off the low. Again, fact. So we dropped into that as support Monday and Tuesday. In overnight trade, we dribbled below that. It looked like it was about to slide and make the break lower. This news now is prompting a potential outside day reversal right back into the high 71.20. Same exact level as the focus. I'm going to take you back to the weekly chart real quick. 71.20, a basic 618 retracement from the decline off the highs. Again, fact. It's also the objective February high close at 71.16. So right there, here's former slope support turned resistance, fourth consecutive week, looking for a reaction right here. So whilst Euro looks like it's broken the weekly opening range, Sterling looks like it's trying to make a break of the weekly opening range for the upside, definitely. Watch 35.90s there. DXY is broken lower. Aussie's right back at the highs. We still haven't buckled that major zone. So still look at 71.20. If today is the day when we finally make the move higher, we get a daily close above, the next level of resistance doesn't change. 71.60s is whereabouts you have the upper parallel. And then the next major level is 72.08 into 72.14. All things held constant. Aussie is now checking the objective weekly range highs. That's all. This is the weekly open. This is the 70.83 level, that 100% extension. Here's the break I was telling you about in overnight and into the open, even European trade. Looks like it was kind of risky, kind of recovered again. Got that prompt data right back at the highs. Weekly opening range is preserved. It's Wednesday. You're trading right into resistance on Aussie dollar. Questions? Initial support still 70.83. Still look for the weekly open. Okay, for initial support, because it converges right on that median line right now today too. So a break below that in the lows would open up that potential pullback towards 70. Bullish invalidation for the broader uptrend is down here. But all things held constant. Weekly opening range is preserved right below resistance. Aussie dollar. You have some data in overnight trade out of Australia. The employment report does come out later tonight. It's Thursday morning in Australia. Looking for a print of about 15,000 off of last month's 76,000 print. Unemployment rate widely expected to hold 4.4%. Questions on Aussie? All right, dollar CAD. Okay, it's trying to make the break. Here's the 200-day moving average. Here is, let me take you back to the weekly chart. Here's on all the time frames. So the 52-week was at 38.64. We halted there last week. We've been dribbling below that yearly moving average, a decent pivot in price for dollar CAD. Remember, the broader uptrend is broken that we've been tracking off that April low. So we were looking to see if we're going to get any follow through. Momentum is looking to see if we can validate a break of that trigger off the low. This is, again, needing a weekly close to validate, but just to show you where we are in the broader downtrend. Now, or in the broader pullback off the high. Here's the 4-hour chart. A break of downtrend support can oftentimes be the sharpest part of the decline. Here's momentum breaking below 30 for the first time since January, and price also breaking below the 200-day moving average. The 50% of the yearly rally, don't really care too much about that, but the May high is right there as well. Very nice pivot in price. Looks like we're trying to break through today. Watch the close. Southbound of 38.50, which is the 200-day moving average, would keep this on track for a test of 37.75. That's the 618 of the yearly advance. That's your next hurdle on the way down. Here's what it looks like on the 4-hour chart. Same formation we've been tracking. Here's the key support. We noted that the weekly opening range was setting up right above that 200-day moving average. Yesterday's rally fails. Here's the break of downtrend support. If there's follow through on this, the June open comes in at 37.98. Just keep that in focus. 38 handle, nice big round figure. It's also the June open and pretty close to the June low. June low comes in at like 37.85. Long story short, right below 38 into 38.74, you get that 618 and then the June open. Beyond that, to the downside, is the objective 2026 yearly open, the August low, the September low, all of that stacks in near 137.27 into 137.26. So dollar CAD threatening a break of downtrend support, certainly a major lateral level just on account of the moving average and certainly the May highs and that pivot zone we were talking about in price, even all the way back here in April, guys. So keep an eye on dollar CAD. Propagated, obviously, we're not only seeing that move in yields, which we didn't look at. We'll take a step back and look there, but oil has also been a little bit back on the crawl higher. Not really seeing resolution yet to anything going on in the Middle East. So double whammy is dollar CAD. Questions on Loonie? All right. Here's dollar yen. So you're getting a substantial pullback here. I guess substantial just based on the range that we've been seeing for the last couple of days, but it's only 1% off the high. But look, we're right back at the 200-day moving average. It's right here at 58.28. It's kind of stacked up. I know this is a mess here, but 57.70 to 57.90 was a nice pivot zone all throughout this year into March. Low, break, acceleration, resistance for a while before the snapback, origin of the next major breakout. Here it is again as a pivot on the way down. That's 57.70 and 57.90. The 200-day moving average is right here at 58.25. This whole zone, just look for inflection here. Below the monthly open, the objective monthly open at 57.56 puts you right back on track for a test of the yearly open. That's 618. That was a major zone. We closed nowhere near this. Okay, so it was huge. Even the low day close from back here in May comes in at 56.38. Any way you slice it, like that's the two zones of support on the way down. You want to get really messy in this chart, and I don't want to, but just to show you, just for giggles here, if you get the 618 retracement of this advance, gives you 56.96, again, just above that yearly open. So are the bulls who have been trying to kind of test the resolve of the coordinated intervention effort giving up here? You'll see. Here's initial support at the 200-day. See if you can break below that monthly open, would open things up. Again, it's 57, 56, somewhere in that zone right there. Key resistance overhead remains 60.36 into 60.74. Nothing changes on that end. Still hate that trade, but there it is. Someone was asking about Aussie yen yesterday in the room. Here's what that looks like. That resistance zone that we were speaking about in the room held. So 1370 into 1368 didn't quite get the clip. The high ended up registering at 1361, so just ahead of that. So that slope was on point. Okay, so keep that in view. Just for that kickbacks alert, we kind of came right back below the weekly open here. Here's that initial test of former slope. So resistance, support. I would just watch a break of this weekly opening range. As it's set right now, looks like a potential rejection at confluent downtrend resistance. So keep an eye on that. We're also talking about that euro resistance zone. That hasn't quite broken just yet. 84.68 was the level that we had slapped together here in the room real quick. We kind of faltered right there. It's a weekly opening range and it's getting coiled up. So potential breakout scenario, key resistance still 86.11 to 86.18. Monthly open support is way down here into 81.40s. I think it was 81.41. All right. Swissy. Oh, by the way, since we're on the yen crosses, I mean, here's what's going on with yield. So obviously a major pullback in the longer end of the curve. Here's that 2024 high I was talking about yesterday at 474. We snapped back again. So that's a third weekly test out of 4 weeks. And a pretty nice strong hold right here. The level that would snap this, that would put this at least would suggest a more significant highs in place. Is a break below the 2025 yearly open at 457. So not quite there yet. Still looks like a potential coil breakout. The range and focus remains in play there on the 10-year. Here's the 30-year. So complete rejection at 527, okay, which was a way decent pivot in price. I'm not sure where that level comes from, but there it is. Nonetheless, we've been watching it. So another rejection and an outside reversal candle potential. Watch for support at the 2023 high. That's 518. Talked about that yesterday. It closed below that would suggest here, again, that there's a potential exhaustive high in place. All right, Swissy looks like this. Finally got the break. Again, this is one of the other dollar crosses that is actually making the break. So we were coiled up right above uptrend support. Here's Swissy on the daily chart. Sorry about that. And there it is. And here's the slope that we were holding all throughout the last 2 months. Here's a break, and it pushes through the monthly opening range low. The first level we talked about was the January high, 80.41. We're trying to break that now. Look at the April high day close at 80 proper, 80.09 to be exact. That level was a really nice pivot on the way up back in June. Converges on the 25% parallel of the same pitchfork we've been tracking since May. And that's your next sweet spot where time converges on price. Here's what it looks like on the 4-hour chart. Can't really see it here, but there's the April high day close, and there's the pivot that you got there. Really nice. So an objective break of the weekly opening range has you looking for a Thursday, Friday low, just from the objective nature of the opening range price study. So that's kind of the level we're looking at. The focus today is on a close below 80.41, extend it into 80.56. That's the August low. Look for a close below this zone to keep the immediate downside in play. Momentum's already in oversold. So the bears are running with this as we speak. This is the lowest momentum reading on daily RSI since May. Watch today's close below 80.41. Next key level of support just above 80.09, that April high day close. Questions on Swissy? All right, finally getting a kick in some volatility here, guys. Hope you're using this to your advantage. Gold on the way up, still hasn't broken. We just broke the highs. Okay, so it's so clean. Here's gold. So here's the focus, the longest. Let me go back to the weekly chart. I'm getting a little excited here. Here's the trade from the weekly chart. The big region of resistance on the weekly chart is 45.06 all the way up into 45.33. That's the 2025 high close, the March low week close, and the 38.2 retracement of the decline off the yearly high. All of that converges on downtrend resistance on the weekly chart right here. Our first region that we were looking for trouble was 43.19. We made it through that a week ago, right after vacation, right before vacation. Here's the stretch higher. Watch for a reaction there if reached. That's the weekly chart from 1,000 feet up. Momentum starting to gain some traction above 50. You drill down to the daily chart. Here's that same slope, a little bit cleaner. We're right there right now. Still haven't buckled that divergence into the highs. Remember, we're only looking at the close with divergence. So this is a higher high, a higher high. We have no confirmed new extreme in the oscillator to verify what's happening in price. So we're not on a confirmed like breakaway trade, runaway just yet. However, we are marking an outside daily reversal if we were to close at these levels right now. We highlighted support into the start of the week and near-term bullish invalidation at 43.04 into 43.19 on Monday. That's exactly, guys, where we buckled and we bottomed last night. The low was 43.24. Okay, we're right ahead of that. And this is an objective attempt now to break the weekly opening range high. Just overhead is that 45.28, 45.33 level. Now you have the 200-day moving average in there. Remember, the 618, the 2025 high close, it's all right there. Here's what it looks like on the near-term charts even. 200-day moving average is there. The 618 retracement is there. 2025 high day close. All of that converges on the 75% parallel into the close of this week. So this is your next major inflection zone for gold. If the breakout of the weekly opening range is legit, look for this maintain some pressure or maintain stability here above 44.33. Next major key level, 45.33 into 45.28. The 200-day moving average comes in right at 45.07. Makes sense? That's the real test. That's the real test for the bulls. If this is if inevitably going to be a reversal and the low is in, or a more significant low is in place, this is going to be the one true test that's going to give us, hopefully, a much more clear-cut answer on gold in the weeks ahead. All right, that's everything I have on my list here. Do let me know if you guys have any other questions, trade setups you want to review. I'll be publishing a piece later today on FOREX.com with regards to Bitcoin. Look, this is the third consecutive daily advance right off the objective monthly open after defending the objective monthly range lows. And it takes you right back into the monthly range high. 618 retracement of the decline from last month's high, 65,124. The median line is just a bit higher. Look, if we break through this, again, 67,322 is going to be critical, but that would suggest or would continue to pile on the notion that a more significant low may have been registered back in July and a large return in Bitcoin. So all things held constant, it's a very clean monthly opening range break. Look for that in the days ahead for guidance on Bitcoin. All right, Chandra, thank you. You as well. Have a great day. We'll go ahead and wrap it up here. Don't forget, the data that's on tap is going to be the FOMC minutes later today. And then that employment data out of Aussie. Look for guidance there, specifically with 71.20, whether we get that crack in Aussie dollar on the upside. And then we'll pick things up tomorrow morning. Till then, best of luck trading, guys, and God bless.